Let's just jump in on the infrastructure point. What are the short-term and longer-term implications of an infrastructure proposal, and how do you model it if we're looking at $500 billion or $2 trillion?
Yeah, well, I think we need to set the stage first, Alex, and that is to say that the United States has really fallen behind as a country with regard to our infrastructure investment. You know, if we look at the way we used to spend in this category, for example, as a percentage of GDP, it has fallen very, very sharply. And so what we basically find is two things. Number one, the condition of our current infrastructure isn't so good. The Society of Civil Engineers gave us a C- report. That doesn't sound very impressive to me, and that has to do with existing infrastructure. It doesn't directly relate to the infrastructure we need to be spending on. Let me give you one number from the recent survey by the World Economic Forum. Yeah. They looked at infrastructure in very many different categories, and one of those categories had to do with computer and telecom technology and how it has been adopted within the economy. The United States, which has the strongest tech companies in the world, ranked 18th, which means that we're not doing a very good job. A lot of this has to do with the very uneven distribution of broadband in the United States.
Abigail, sorry, Abby, compared with who? Who is the US falling behind? Because the first name that springs to mind is China, and then we get into the whole geopolitical narrative. Is it China, or is it Europe, or is it somebody else?
It's both. If we compare ourselves to China, it's a little bit apples and oranges, because as a developing economy, you would expect them to be spending more on infrastructure as a percentage of GDP. But we're falling behind our own record. If you look just at federal investment in infrastructure, which now about 2.5% of the federal budget. A couple of decades ago, it was 5%. And if we compare ourselves to other developed economies, rather, that's where I'm really concerned. Because what we see is other nations have a very specific policy plan in place where they believe keeping their infrastructure up to snuff and ready for the 21st century industries is really a priority. And we've not done that in the United States. Other countries, ranging from Canada, Australia, France, and so on, really have much more significant direction, not just from the national government, but also from their local government in this regard.
And we see it all the time. Like, even though Colonial Pipeline was ransomware, that's clearly still an issue. You're looking at the bridge that was on the Mississippi River. You have the Texas freeze and their grid as well. So, Abby, what dollar amount has your research shown that we need to fix it, either public or private?
I'm not in a position to judge that, nor do I think is anybody in the investment community. So instead, we use the data from the civil engineers who actually go out and examine and inspect tens of thousands of bridges, many millions of miles of roadway. And their estimate is that just to fix what we have is on the order of $2.5 trillion.
Close.
Okay, so let's talk about this from an investor's point of view. I'm looking at the United States. A, should the United States carry a discount because its infrastructure isn't good enough? And B, if I'm an investor, how do I invest to make sure that I'm seeing the benefit in my portfolio when the US does spend money?
Those are wonderful questions and things that we are, as a nation, in the process of trying to sort out, because clearly, until we have some sense of how things play out in Washington, some of this is very much, on, I was going to say quicksand. We don't quite know where we're going to end up. So let me try my best to answer your questions. Number one, I think that there is a recognition by both parties that we need to invest heavily in the 21st century infrastructure that will help not just our urban areas, but our rural areas. And our rural areas are falling far behind with regard to broadband. I mean, how can you have precision agriculture if you don't have a Wi-Fi signal? So there are those kinds of issues that we're looking at, number one. Number two, we're also looking at where we have fallen behind, not just in terms of government spending on infrastructure, but also in terms of private spending. And one of the things that does encourage us a little bit is that we are seeing a pickup by some companies, some industries, in terms of their long-term investment in CapEx, research, R&D, and so on, but it has not kept pace with the dramatic increase in corporate cash flow. So that's something that is of concern to us. And the other thing to keep in mind is that the U.S. model is different from many other nations. We have a federal system. We rely on the federal government to do some things. We require on state and local to do other things. I mentioned before that the federal commitment as a percentage of the federal budget is now half of what it used to be. When we look at the state and local level, we run into other problems because so many state and local governments are having budgetary issues. And what do you cut back? You cut back on the things that your voters don't see. Well, what don't they see? They don't see the pipes, the water pipes. They don't see that are buried. They don't see the understructure of roads and so on. And so we have a lot of deferred maintenance in this country. And I think we really need to address both the issues, fix what's broken, and think about what we need in the future.
Abby, if we get, let's just play the game, $2.5 trillion from the government, is that inflationary?
I believe that we need to look at what the money is going for. If we're talking about, for example, and I'm just making this up, $2.5 trillion over a 10 to 20 year period, which is what the civil engineers did, I don't think that's inflationary for a couple of reasons. Number one, because it's not being spent all at once. And number two, it's an investment in the future. We really have to distinguish from a policy perspective with spending that is spending for spending's sake versus spending that really invests in the future. What does that include? Infrastructure for sure, research for sure, and education belongs in that category too. And this is not a new concept. Abraham Lincoln, who was perhaps the first infrastructure president, believed very strongly that you needed to invest in colleges, in engineering schools, and you needed to invest in the young people who could move the nation forward. And it was that sort of investment in the 1860s, during the middle of the Civil War, that really set the United States up to become a leading nation by the beginning of the following century.
Abby, as we wrap this conversation up, I have to get your take on what's happening in financial markets, particularly equity markets. What is your sense of valuations right now? We're going through a huge rotation. Just from a kind of stability, financial stability point of view, do you think we're starting to get a little frothy here?
The valuations clearly are at very high percentiles relative to history. The only valuations that are not are things like equity risk premium and so on that key off of inflation and interest rates. And as you've done such a great job discussing the fact that inflation and interest rates are on the way up, I think we have to recognize that returns overall in the U.S. equity market from this point will be very modest and perhaps volatile compared to what we've enjoyed, especially over the last 12 to 15 months. But I think that there is a rotation going on. Investors are looking at where earnings growth will be coming from. And what appeals to me, quite frankly, is that investors are acting like investors again. There's less emphasis on momentum, and there's more emphasis on relative valuation and which of the companies that have the strongest cash flow growth and are investing that cash flow for longer term purposes, including CapEx, including basic research, because those are the companies that will be leadership companies over the next handful of years.